But thank you so much for joining us again.
Hey, anytime. Love you guys. Love what you're doing, and always happy to jump on, especially to talk about the tokenization of real world assets or whatever, right? Our
Yeah.
lovely, wonderful world of emerging tech and Web3.
Yeah, and it's thrown around a lot, but I've always thought that NFTs and like artwork was like a small use case or was supposed to be a small use case of the
Mm-hmm.
NFT smart contracts, and I always thought like real world assets should have been the bigger one we were paying more attention to.
Right, but that's infrastructure, right? And infrastructure is always it's a longer play, right? The NFT JPEG craze is fast and furious, and it's still there. Like I even like meme coins even, right? Like there's something fun, and it's kind of like, to me, meme coins are like a young person's lottery, right? Like it's fun and gamification and that sort of thing. And I don't think it's going away. I just think it's evolving, right? It's just different.
Yeah, I've stayed away from NFTs myself because and meme coins. One person literally paid me $50 just to spend like an hour researching and like pick a bunch of meme coins, despite me saying like I have no idea what I'm doing and it might very
Right.
well be eeny, meeny, miny, mo. And they're like, I don't care, do it. So I did it, and he lost all of his money on all the ones I picked.
Really? Well, yeah, meme coins are definitely you have to know. They're like Fast and Furious. You know what I mean? Like Fast and
Yeah.
Furious. The Trump coin was launched on Pump Fun, right? And it's, if you know how to, monitor them, watch them, and know that it's a short-term play. Like it's like day trading. You've got to watch it. You can't buy them and then go to sleep, so to think. You're playing in the market. You're playing and getting
That's
out.
why I don't like to day trade, because I like to sleep.
That's right. Well, I am working on something that might be like a just program it kind of thing. But we can talk about that later, because
Oh,
today it's
perfect. Yeah.
real world assets and infrastructure and that stuff that the banks are doing, and JP Morgan and BlackRock and Blue Lighthouse, what we're doing.
Yes. Yes. It's great to it's kind of cool that you're bunching yourself in with those people, isn't it?
Yes, like so Thomas is the founder of Blue Lighthouse, and he has been in the space for a long time, but he's a visionary, and he is definitely somebody that's like, it's an infrastructure play, it's a regulatory play, and there's so much opportunity in it if you build it correctly and you build it compliantly, right? Like regulations coming in, and that whole idea of let's put it offshore, that's not going to work anymore.
Yeah, of course. So, how did like Blue Lighthouse come to be? What's its story, and why did he create it?
So Blue Lighthouse was created from, a simple observation that traditional industries were finally ready to explore blockchain and tokenization, right? But they had no clear, trustworthy partner to guide them through the development, tokenization, and the market strategy, right? So, and a lot of scams have been putting people off, right? And I find a lot of what I'm doing today is teaching people what the difference between crypto and the tokenization of real world assets is, right? So tokenization of real world assets is really modernizing traditional finance, right? We're just modernizing it. And a lot of that happens to be on cryptocurrency rails, right? And a really funny term I heard at an event was they talked about the DeFi mullet. Have you heard that term, DeFi mullet?
That I have not. No.
So a DeFi mullet, they're basically predicting by saying a DeFi, they're saying finance is going to be a DeFi mullet, right? Where it's banks in the front, the bangs of the mullet will be banking and infrastructure, and the long hair will be decentralized finance rails or crypto rails, right? So Thomas saw that these, traditional companies, supply chain companies, shipping companies, gold companies, natural resource companies are going to start looking, as the banks have already done, have started to do, that these traditional companies are going to start looking into the space, and they're going to want a solid dev team, infrastructure team, that have been in the space for a long time and can guide them through that process. So
Eh,
yeah, so we've been basically consulting with a variety of projects, and we're in the process of developing like full turnkey tokenization solutions for these companies.
And so real world assets is your focus, but like what is that in like the basic terms? Like if I'm like I heard about Bitcoin a week ago, what would you explain? What would you say real world assets are to me?
So a real world asset is basically, it's an asset that exists in the real world, whether it's real estate or gold or the US dollar, and you're giving it a digital certificate or you're giving it a digital footprint. So it's basically modernizing the old financial infrastructure that exists. Like you think about buying a house and how paper intensive that is, right? And so tokenization is basically updating that. So it's programming money and programming ownership certificates to automate and to act based off of deliverables. Like if A happens, B happens. If A doesn't happen, C happens. And it's just automating it as opposed to dealing with so many humans and so much paperwork.
The one thing I've always wondered about with like putting assets on chain, let's say like a title deed, um, what would happen if someone got drained? Can like someone just knock on your door and say this house is mine?
No, and I mean, they're doing it now in the real world, right? Like that's an issue that's happening in what we say in Web3 is what happens in the real world and what happens on chain. And that's happening in the real world. And that's why you get insurance and that sort of thing. So, um, a good example of have you heard of Masterworks?
No.
So Masterworks is actually it's a Web3 company that's been around for a long time, and it's one of the companies I go to in regards to explaining real world assets. So Masterworks, um, Masterworks basically fractionalizes high value artwork, Banksy, Picasso's, that sort of thing, and the return on investing in high priced art is pretty good. It can be a minimum of like 12% a year. So for a lot of that,
Wow.
that outperforms the S&P, right? It outperforms your bank and that sort of thing. So prior to tokenization, who could afford to buy a Picasso? Who could afford to buy a Banksy? Only the wealthy. So Masterworks, which is a US registered company, they fractionalize this art. So you sign up for Masterworks. Because it's US, you do go through an interview to make sure you're somewhat of an educated, high net worth kind of investor. And then once you're on the platform, you can buy a fractional piece of a Picasso, a fractional piece of a Banksy. And they will tell you, Masterworks will tell you when you go to buy a specific piece of artwork that how long they think they'll hold it for before they sell it. But if you own the tokens, you can sell it at any time, right? You can buy whatever percentage of a Banksy and you can turn around and you can sell it. You don't have to wait. You don't have to wait for Masterworks to actually sell the piece of artwork, whether it's 4 years later or 5 years later. And that's also one of the benefits of tokenization of real world assets is, so it's starting to happen in construction and real estate where there's been a couple of construction development projects in the US that they have tokenized. So if you're buying into a construction project traditionally, you have to come in with a high investment amount, right? Like we're talking a few $100,000, or they're not going to talk to you, right? Like these guys, you're a construction company and you're about to build a shopping mall. You don't have time to meet with each investor if they're only giving you $5,000 or $10,000, right? You're only
Hmm.
going to meet with people that are giving you a huge chunk of money. Now, when you invest that huge chunk of money into that development project, you have no liquidity on that investment until that property sells, right? And if you want to break or get your liquidity out of it early, you have to negotiate with the developer, usually take a cut. Lawyers are involved to figure out, if you're 2 years into a 6-year development, what's that worth, right? Has that increased in value, decreased in value? So it's very laborious intensive. When you tokenize it, it's the platform that onboards the investors, basically, not the developer. So it saves the developer a lot of time. Then you, as an investor, you can come in at $5,000, at $10,000, at $25,000, and then you don't have to wait the time frame for the development to be built, for whatever tenants, whatever it is. You can flip your tokens. You can sell them at any time. So
And I guess like
Masterworks is a good example, a great example of a successful Web3 company that's tokenizing and has been doing it for years.
firstly, that's actually a really great example. I feel like anybody who hasn't even heard of, has no idea about Web3 or blockchain or anything, could understand perfectly what you just said. So
Right.
kudos for
Well,
that.
how cool to be able to go around and say, "Well, I own a Banksy.
Yeah,
I own a
but like
Picasso.
saying
Yeah, only a
I own,
fraction of it, but I own a Picasso." Yeah.
but to say like I own a percentage of something, like because you can own a percentage of a business, right? So that's something that
Right.
could translate easily for traditional finance people.
Right.
And I think like it's, you mentioned like the lawyers involved, how you discuss value. Well, the value is whatever the market tells you, if you have a tokenized asset, right? If
Right.
it's worth, if your $5,000 investment is, you can only find somebody willing to pay $3,000 for it, well then that's what it's worth.
Right. No, I mean the model, like especially for when we talk about the democracy of finance, right? Of letting smaller investors into those major projects, right? It fractionalization democratizes access to these premium assets. It increases liquidity, right? Because you can start selling right away. It allows for 24/7 global markets and near instant settlement. Like you're not waiting for somebody to return to the office on Monday morning. And it provides transparent ownership because the records are on a public blockchain, if it's on a public blockchain.
I feel like also it could help change the game in terms of like a lot of industries have like are two or three big players, right?
Right.
And especially here in Toronto with constructions, I think there's like four players or something.
Right.
And let's say I won like five lotteries in a row. As ridiculous as that seems, and I want to get into the construction industry myself. Um, I can't, because what Minto will do is basically tell the guy that supplies the wood, the nails, everything, say, you sell a single nail to that guy, and I will never buy from you again.
Right. Well, the interesting thing that's happened in construction the last few years, it's like anything, right? It has ebbs and flows. Whereas a few years ago, construction companies could get, depending on the project, right? So this is obviously very generalized conversation, but I know some people in the construction industry in Canada, and when the markets are hot, they can get money from the bank, right? Like they just go to the bank and they get money, but banks stopped lending, right? So it's like we see it happen where it gets harder and harder to get money, and that's what happened is the bank stopped lending, or you had a higher burden of proof in regards to getting that money. And so what happens when the bank stop lending to you? And nobody's investing anymore because the market's not stable, right? Like, is real estate a good investment right now? Even commercial real estate, right? Commercial real estate took a massive hit during COVID. So banks stopped lending. So who do you go to, right? And this allowed a new a new form of financing, right? A new market, a new pool of investors to go after when the banks dry up.
And I feel like a lot of has happened because of COVID in terms of like shaking up of us trying to fight back a bit, you know,
Hmm.
especially with the work from home stuff. But
Yeah.
so construction is huge, obviously, but like are there any other like who else would you consider a target audience for Blue Lighthouse? Like who do you want to work with?
So for us, it's any like I'm personally myself excited about the natural resources, right?
Hmm.
So we've been consulting with an oil company that they buy stripper wells in Oklahoma and Texas. So stripper wells are wells that have been abandoned. And when you have a well that's been an oil well that's been pumping for years and paying out royalties, right? There could be thousands of people getting physical checks, getting royalties, right? Cousins, uncles, nieces, nephews, wives, new wives, new husbands kind of thing. And they each get a piece depending on where that, who owned the well, like the land, right? Who had claim on the land. So there was a study done by I don't remember the name of the company, on what it costs to write a check, a physical check, one physical check. What does it cost to write a check and maintain that check? And with the current structure, if it's an existing royalty payment, those are people that will not go to a digital wallet, right? Like you can't just say, well, we're going to stop writing you a check. You're going to have to download this digital crypto wallet and we're just going to start paying you automatically into your digital wallet. They won't do that. But the benefit of these stripper wells is they're abandoned, which means the royalty claim goes to zero. So you're starting everything from scratch, right? And they still produce enough oil to be profitable, but not enough oil for a big company to want to do it. And then that's why they abandon them. So um, the benefit of tokenization in this regard is you drop everything back to zero. Anybody that's investing in that now will have a digital wallet and all the royalty payments will be programmed in. So all the company has to do is basically open up their dashboard, right? And hit send kind of thing. So that's one of the benefits of tokenization is the automation in the back end of royalty
Yeah,
payments, what percentage, who gets what, and then it boom, it just lands into their digital wallet.
that's
So
actually really cool. You also remind me of that Seinfeld episode where Jerry was getting like 100 checks like a week from Japan, but they were all like 10 cents each.
exactly, right? So and then it's not worth cashing the check because it's going to cost you more to cash the check.
Yeah,
So in this case and for this use case, it's a great opportunity because you can start it fresh, right? You start it from ground zero, and then anybody that comes into it would just get their digital wallet, and then everything would be programmed in to be automated. So natural resources, we're looking at it. We're still, I think it's going to be really big in regards to mining and not just as a stable coin. So we've seen the use case in regards to stable coins and a gold backed token, right? There's Pax Gold. There's already
mhm,
companies that are tokenizing gold for a stable coin. I do think it will be used at some point for royalties in regards to junior mining output, whether it's gold, silver, uranium, that sort of thing. And it'll be a new opportunity for mining companies to raise, to bring in fresh young investors, right? And real estate, I think real estate, which it is already kind of taking off in real estate. More so on a commercial level, right? On a bigger financial structure level. It's not retail yet, right? Where I there are platforms that are trying to fractionalize whether you're investing in a house in Los Angeles or whatever, but that really hasn't the market. The education's not there where the masses know about those opportunities where you can own fractional real estate in a specific real estate market, but it's coming and it's going to happen, right? So yeah. So our target, anybody that wants to, tokenize, we are launching and working on a gold product called Goldie City. where we want to tokenize gold bullion or gold bars that are already from a reputable gold shop, right? They already sell the gold, they already verify the gold, they verify gold storage, that sort of thing. And we're working on doing that.
That's really cool because like I've long thought some of the tokenization stuff, like I feel, oh, where like you can buy the NFT of this Rolex. I'm like, but I want the Rolex.
Exactly.
Um,
Like, why would I buy an NFT of the Rolex, right?
but the gold, especially if you're taking care of if all the storage stuff, you know for a fact it's there. Like
Correct. So
that I think is really cool.
yeah, what this would do is so you can go into a gold store in Toronto and you can buy gold. Now you can take the gold physically or you can ask them to put it into storage, right?
Hmm.
So what we want to do is if you put it into storage, right? So you have a contract with that company or with a storage facility, they're going to store it. Then you, instead of like a paper certificate, it will be tokens, like token certificates sort of thing. And then at some point, then now you have a digital footprint of an asset that you own, and now you can take that into like MakerDAO or Compound and use it as leverage, collateral, etc., in the DeFi marketplace, in DeFi.
You're bringing me back to the DeFi wars.
The DeFi wars. What are the DeFi wars?
Sorry, not the DeFi wars. The oh, I forget what it was called. Where basically, you had like you deposited your stable coin and then you would get like a wrapped asset in return, and then that other another DeFi protocol came and then said you can now deposit that wrapped asset in our protocol, and then you'd
Yes.
have like a 10 to 15 layered token that like and at the time this is when people were just thinking that random tokens that you got for free were worth something and
Right, but
not really.
some because you would get rewards, right? Like if you did that in MakerDAO back when
Oh, you got
MakerDAO and Compound, you earned tokens that were actually quite valuable. So they would do
yes for
that
like
is if you knew it,
5%.
yeah, if you knew what was going on, you could move your collateral across those platforms and make money. Yeah,
So this is how some people at the time were claiming inaccurately, but they were making like 150% returns.
right.
But that's really cool. um, so like, where do you think this like real world market will be in the next 3 to 5 years? Like, for instance, even me, like I was in Poland recently, where I presented the idea of using like healthcare data on chain. So, like, what else do you think could be used for it in the next few years?
So, if you follow like Jamie Dimon from JP Morgan or Larry Fink from BlackRock, they're like almost everything's going to go on chain, right? Any sort of asset or real world asset will go on chain. I believe it will become the foundational infrastructure for global finance. Um, and that's already gaining adoption, right? JP Morgan has their own stable coin and they're using it for settlements and they're saving multi millions, if not billions of dollars doing that. So it's already gaining adoption in real estate. Private credit is massive right now. Um, so I think the market is shifting rapidly from early test to real enterprise use cases, right? We've already seen successful stablecoins, and countries implementing stablecoin regulation and all that sort of stuff. So I think we're going to see in 5 years mass adoption. And if you're not aware of it, you will be using it on some level, right? Like this
I,
idea of banking. If I want to send money to the US from my bank account, I still have to go to the
oh
bank
God,
and
good
do it.
luck.
I still have to go to the bank, right? And send a wire. Whereas I can't do it through my account. Whereas crypto, I can send it, boom, done, seconds, right? So I think you're going to see more of that infrastructure taking hold.
A
So
client of mine owes me 2,000 euros, and I have to. It's not a Web3 thing, so I had to like go to the bank because they sent me a form to fill out, and like I don't know what any of this is. So I go to the bank, and then they tell me, but apparently their form is slightly different in Holland than what they have here. So there was a miscommunication. So then I had to go back to the bank, and I'm like, oh my God, this would have taken me 5 seconds on my phone with stable coins.
Right.
Um, and I did ask for the record if it could be done that way. They said no. But there's another thing you brought up that I've always been an advocate for. If you don't know, like if you don't realize that what's going on, you'll probably still be using it in a
Right.
different capacity.
Right.
And I had an example of that. So my godson is Bolivian. So you talk about to the U.S. Imagine sending money to Bolivia; it's 1,000 times harder. Um, and his sister said, "Oh, there's a new way to send money through this. I forget what it's called. Oh, AirTM. I don't know if you've heard of it."
No.
Yeah, so basically they're like, "Oh, it's easier for us to use it." And so I looked it up, and I'm like, "Oh, it uses stable coins."
Yeah.
And she's like, "What's that?" I'm like, "It's crypto. You're using crypto. They're using blockchain to do this."
Yeah.
And she had no idea.
Yeah.
And to be honest, they didn't even say the word crypto. They just said USDT, and that's how I
Yeah. Yeah. Yeah.
recognized it. A friend who has no idea what that is was just assumed she didn't know about the technology behind it. She just
Yeah.
thought I'm sending dollars.
Well, what's interesting, and I think a really, really big infrastructure use case is going to be shipping, right? Shipping, transportation. You see all those transport trucks crossing the border, those ships that sit in the Panama Canal, and ships and boats and stuff can sit while they're waiting for payments to settle, right? So apparently in Panama, when a ship gets, to the Panama Canal, if it hasn't paid or something on the ships hasn't, so imagine these ships arrive in the US and there's some tariffs that haven't been paid or some fee hasn't been paid, they'll sit there and they get fined and they get fined for every day they sit there while they're waiting for payments to settle. Well, they can do it instantly with a stable coin. It can be done instantly. So
Yeah, my first thought when you said that is that it's probably them not even not coming up with the money. It's probably just a processing issue
no,
that the reason they're taking so
absolutely. And some of those payment processing, depending on what country it's coming from, can take 5 days, right? So imagine now, you're a shipping company and you have transport trucks that go across the border, Canada, USA, Canada, USA, Canada, USA. What are you paying in exchange fees? What are you paying for to settle? Right? What are you paying in wire fees, wiring payments back and forth? If that shipping company initiates a payment system that's based on stable coins, then basically on the Canadian side, they would load Canadian dollar, which would flip into the Canadian stable coin or into the US stable coin. And then we're just transacting in this stable coin. We are only transacting in USDC, right? So you upload your USD, it flips into a stable coin, and then that's it. Then they control the fees, right?
Mhm.
So,
I think it also allows you to keep the stable coin. Like for instance, I thought about just there's all this speculative talk that the US dollar will plunge.
yeah,
My advisor told me that Canadian dollar is going to be stronger than the US. I'm not going to get into that debate, but that's just what he said. But he said if you had to pick a foreign currency, he'd pick the euro. So I was like, well, I don't need the cash right away. I was going to pick the euro. I was going to keep the euros, just, see what happens. And the Canadian government was like, nope, it's automatically converted back to Canadian dollars. And I was like, okay. It's like they took that power. They took that power of decision away from me, the bank.
right, right. No, and I think our regulation is getting clearer, right? So the US is a lot faster on that than Canada. And then I think once you see Canada catch up, especially in regards to cross-border and stablecoin usage, you'll start to see mass adoption with legit, like with traditional companies, not Web3
Mhm.
companies. You will start to see mass adoption with traditional companies.
No, I feel like if you are in that Web3 company, your best bet is to be bought out by one of these traditional companies,
Right.
and they'll just use your system.
Yeah, I just consulted with a company recently, and their pitch decks and everything were catered to crypto companies. And I'm like, why would you do that? Like, why would you base your business model on crypto companies? Like, I wouldn't. Your business model's based on traditional industries picking up your infrastructure play. And you have a play there, you have a use case there, and it's solid. Like, don't focus on Web3 where the companies are small, there's no money, and they're not going to last a couple of years unless they're really big projects, right? Like, I'm a big believer in the infrastructure companies coming up in the space, but are the play is going to be traditional infrastructure and that integration. That's what's going to bring mass adoption.
And you mentioned regulation and briefly, and you say like, US usually does things faster than Canada, which unfortunately is kind of true. I often accuse the OSC of just copying and pasting the SEC laws and just, doing the control F and replacing US with Ontario.
Right.
Um, but like, what do you think? Like, how big of a role does the OSC and like the SEC like play in either facilitating or creating a roadblock for adoption?
I think it's a massive, like, look, like, how many companies have you come across in Web3 where we even say, like, don't start in Canada? Like, one, Canada's a small market, right? Like, it's a small market compared to the USA. So if you're a Web3 startup in Toronto, where's your where's your quickest road to adoption where you're not paying hundreds of thousands of dollars just to talk to regulators, right? It's
Hmm.
not cheap. Being compliant is not cheap. And so the fact that the US is way more aggressive on it is, um, to me, it's just a big signal that you should focus on the US, right? You should focus on the US because they're just more progressive. The investors in the US are more progressive, and regulation is just on your side. And it's not on our side in Canada, not yet. It's just not there.
My
And
big fear with the US is that it's I still don't think it's great either. And because I spoke to someone who just like had to spend 50K in legal bills for the US, and
mhm.
that was like, that's not great either, to be honest. That's $50,000 that should be going towards other parts of your business.
Well, it depends, right? It depends on how big is your business. Do you know what I mean?
It's not
Like, how big is your
his
business?
business is not big. I will say it's not big right now.
Then it's just like, I've known companies that started in Canada, really they wanted legitimacy and they really wanted to knock it out of the park and they wanted to be first. And unfortunately, they paid so much money, and this is in Canada, they paid so much money in to figure out regulation that they just went bankrupt. And it didn't it failed to launch because they were just, so much money was sucked into legal compliance. And we've seen some companies leave Ontario and go to Alberta because it was just easier to deal with regulators in Alberta than it was to deal with the OSC. So it's tough, right? And I know there's a commercial real estate platform that's they filed all the OSC paperwork and they're waiting for an answer, and they keep kicking that down the road. And what do you do when you've invested up to $1 million to do this? You know what I mean? And you can't talk to regulators. Like, look at Ethereum. Ethereum's a great use case of what Canada lost because they couldn't talk to regulators. So it's unfortunate that, and that's the biggest, to me, that's the biggest hurdle in Canada for real world asset tokenization is regulators. It's the biggest hurdle right now is regulation. And when you're looking at, I have to pay however six figures just to talk to somebody at the CSC or the OSC, and there's a clear path south of the border in a bigger market. Then
What about if you keep going like what if you keep going south? You don't stop at the US.
what do you mean?
Well, like I said, like your advocacy for the U.S. over Canada makes sense, but like I also said, the U.S. has their own problems. Isn't there other markets that you could? Do you think there's other markets you could go to
Oh no,
that aren't?
absolutely. Like Europe is ahead of Canada. Hong Kong is aggressively pursuing tokenization projects, right? Um, so no, 100%. It's a question of where, again, it is a legal question on where is the in that, when I'm consulting with a project, it's one of the questions I'll ask is what is your legal advisory? What are you leaning towards? Because I can build you whatever you want, but what are your lawyers telling you you can actually do? Right? It's like I don't know how many conversations I've been in. Oh, we're going to do this, and I'm like, have you talked to a lawyer? Because you can't do that, you know.
Yeah,
And it just is one of those things, and I think that's also another hurdle is the cost, right? It's the shiny penny right now, tokenization. It's the shiny penny right now, but it's not cheap. It's not a cheap path. It's not a quick fix. It's not it's a new market and you need marketing dollars a lot of like I'll have meetings with people and they think it's magic, right? Like, oh, if I just say I'm doing this, I'll magically raise the money I can't raise traditionally. And I'll say I can't fix poor product market fit. I can't fix a company that's not run very well. Tokenization won't fix it either. You know what I mean? It's not a magic bullet and it's not a cheap magic bullet.
I feel like that's beyond Web3 too. That's like you can say that about pretty much every industry.
Correct. Correct.
And like and you go back to like lawyers, what you could do. I knew someone that was like amazed because a lot of our like alcohol and stuff is really expensive here compared to the rest of the world, right?
Hmm.
And they're like, because you can get, uh, I don't know what the prices are now. This is old information, but the math is the same. There's like $4 bottles of rum in Cuba that are like $40 here, and they're like, we have to
Hmm.
be able to make money off of that. And they're like, yeah, good luck.
Hmm.
Like, there's a believe it or not, the companies are not making a 10,000% markup on that $4 bottles. There's like
Right.
significant taxes, duties, transportations, and they're probably making $4 on that four
Hmm.
dollar that they're selling for 40.
Yeah. Well, I find that like when I consult with startups and I work with startups in emerging tech, is a lot of the times they will overdevelop, right? So a lot of times they'll develop features nobody wants. They solve problems that don't exist, but they put little effort in product market fit and little effort in marketing. And then they wonder why they don't succeed, right? And they usually blame marketing. And it's like, you didn't talk to users. Did you
You
talk
should
to
never
potential
convince
clients, right?
you should never convince the market that that's what they want. You should be
Correct.
they should be convincing you what to build.
Correct. And you should be, especially now with the markets the way they are, like VC funding is really
Gone.
tough right now. And what I want to see is what are you building? Who are you building with? Like who have you talked to? Who are you building for and are you working with them in building it? Do you know what I mean? Like we build in silos and we just assume we go into dark mode and assume we build this amazing product with all of these features. And they even say like even if you look at a banking app, if you go log into your banking app, how many of the features do you actually use? Like how much of all of that do you actually use? And they say that's a big problem in software development is we build all these magical features, but we don't nail one thing right. Right? You nail one thing and build off that, and then you can go to investors and say I have users, right? I have actual users. I have worked with XYZ shipping company and we're building with them, we're working with them and building out for them. And I think that's what we're going to see more of moving forward.
That's funny. Like with the banking, you're you're right. You do the e-transfer and you pay the bills. What is that, two?
Right, what else do you use? And they have all those options. Right, how much do you actually use? I think they have heat
What
maps. They have heat maps that actually tell them, what people use and what's not being used and what nobody gives a shit about, right? So,
like, the only thing that makes me feel like those heat maps might not exist is because they clearly aren't listening to them. If they are, they do.
right,
It's obviously like, okay, it's this button and this button is red and everything else is pure white.
right.
Um, but I remember they one time my bank called me. Oh, we sent you this message on your app. I'm like, you think I read those?
Right, right,
Like, this is the first time you're telling me I get messages in my banking app.
right, right.
So like beyond these regulation stuff, like, uh, so what emerging trade pick an emerging trend and how you see it plays out in like the regulatory environment. Like, do you think it's going to be stopped or it's going to pass the regulations?
I think, well, ultimately, obviously, I think where regulation will start to come on board. If not, think of how far behind Canadian companies will fall behind the US, right? If all US companies start using a stable coin and Canada doesn't have anything in play yet, like, how does that look? Right? Especially with how much cross-border business we do. So, so I definitely think regulation will come around. It's a question of how long that's going to take. Some of the things that excite me about real world adoption, obviously, is, seeing so many of our friends and the projects they've been working so hard on start to take flight. Like, that is exciting for me, right? The believers and the builders that stuck around. Um, I'm excited about DeFi integrations, like I mentioned in regards to gold and natural resources. I think it's very exciting when you can now take an asset, like if you've invested in the Toronto Stock Exchange or the CSE, or you've invested in gold, and you can now take those proof of ownership and move that and get loans, right? Like right now, if I go to the bank for a loan, I can't just peg like all the paperwork we have to do, right? But if you can take everything you have in digital assets and use it as collateral, and they don't need to know, right? It's one of the things they say about DeFi. They don't need to know your skin color, your sex, your anything, right? It's what do you have? What collateral do you have? So,
And like, my friend is really good at business, but he kind of has a shitty cash flow situation, right? And
right,
he's always like, he wanted to buy this marina and he just didn't have enough liquidity. And
right,
he did have a bunch of crypto, and I was like, actually, I could probably get you like 100 grand out of your crypto that you can ride,
right,
and it shouldn't be like I shouldn't have to tell him that. This should be common knowledge.
right. So I'm
So
looking
just
forward to
thinking,
that, right? And I also think the transparency that we have in blockchain, I think those automated audits, real-time visibility, right? I think those things are great. Fractional ownership models, I think, will allow, like we talked about, right? People that aren't millionaires being able to buy a Banksy or a Picasso or invest in a real estate market solely based off fractionalization, as opposed to having to go to that market and buy a house and be a landlord, right?
yeah,
um I think, for ESG reporting purposes, I think blockchain with the use of AI and all of that will allow for more transparent reporting in regards to the environment, which opens it up, for investing companies that are trying to hit ESG, criteria. So I think there's a lot of exciting things happening with tokenization, blockchain, and with, AI integrations, quantum computing. I think it's pretty fascinating.
but just think what that could do for the economy with all that liquidity opened up.
Mm-hmm.
No more just sitting in some random wallet, collecting virtual dust.
Mm-hmm. Like, what can I do with the stocks right now that I have on the TSX, right? Like nothing other than buy them or sell them.
And it sucks that you have to pick one or the other, right? If I wanted
Yeah.
to buy a house, I don't have this much money, but if I had a stock portfolio worth $1.5 million and I wanted to buy a house, I choose one or the other. Where it's like,
Hmm.
why can't I have both?
Right. And what happens with smart contracts, which protects actually the lender, is the liquidation ability, right? So when you bring in collateral from digital assets to a platform that's issuing loans based off of crypto collateral, basically if the price drops of those crypto assets, you either have to amp up what you're holding or they will sell your crypto. That's how they protect themselves,
Hmm.
right? Which is also like how great is that as a lender, right? It's it protects you from that loss of, oh, I'm just not going to pay you.
Well, that's what
I'm
happened in
I'm just not going to pay you.
2008. In 2008, when they didn't pay because the housing market collapsed. Now the banks
Right.
had like houses worth 100 grand against $400,000 loans.
Right.
And in theory, the smart contract, it's like even in flash crashes, should anticipate that.
Correct. Correct. Which doesn't help people on the lower end of the economic spectrum that do need loans where they're going through, the rigmarole, the process of getting a mortgage
Mhm.
is unbelievable. I've had friends in Canada that are very liquid and multimillionaires and couldn't get a mortgage, right? And it's like, wow, like it's pretty tough. So,
Yeah.
yeah.
I've also heard that with renting. Somebody sold their house and they hadn't rented in like 20 years and they couldn't get a rental because they had no recent rental history.
Well, that's nuts. The credit rating
Yeah.
should suffice there, right? But
I, Maybe they're not telling me something, but that's what they told me.
right. Yeah, I don't know if that would, to me it would be the credit. If they have a great credit rating, they have a great credit rating. And who wants to fuck with their credit rating, right? Like I don't.
Hmm. Well, some people don't care.
But then you don't rent to them.
Yeah.
If you can avoid it, then that's who you don't rent to. Yeah. So,
Just before we go, is there any initiatives that you'd like to talk about from Blue Lighthouse that you haven't mentioned already?
yeah, like I said, I'm excited about Goldie City and the tokenization of gold. I've been writing about it for years. I do believe it will start to take more of a foothold, not just from a stablecoin part, but also from a fundraising, the potential for fundraising for junior mining companies, right, which make up so much of the Canadian mining landscape. So I am excited for that, and yeah, I so we are very excited at Blue Lighthouse for the infrastructure opportunities and what's coming.
Perfect, perfect. And you have like a timeline of when we could see an announcement for that, or still pending?
We're whitelisting now for Goldie City,
Mhm.
and we're hoping for some really big announcements in January.
Okay, so after you enjoy a nice Christmas, everybody, keep an eye out for those announcements.
That's right. Hi, Anna. Hi, John.
Bye,
Hi,
guys.
Idris.
But thank you so much for joining us again. It's always lovely to have you, and I hope to have you back soon. I think you'd be the first one to do the hat trick if you did that. So let's hopefully that'll be a reality.
Ooh.
Yes,
Ooh.
Toronto DAO guest space hat trick. We should make a badge of that.
And we're actually working with, I don't know if you've heard of Genzio. Genzio is a big company in the Web3 space. We're going to be doing a series of spaces over the holidays. So
Okay.
we're gonna have some holiday fun with that because we figure, people will be bored. Right? Well, we're hoping. We're hoping.
Yeah.
So yeah, so that'll be a lot of fun.
Stop spending time with your families.
That's right. Ignore them. You're done. You've tapped out. Now it's time to get back to your crypto friends on X, and
Yeah.
and let's talk about it. And it looks like December so far hasn't been too bad in the markets. So yeah.
That's true. Although to be honest, I never got that. Like Bitcoin, what the Bitcoin going up or down 10% has no impact on my short-term ability to pay bills. So Um, I always pay attention regardless of the market.
Right. But it affects us, right? It affects
It
the money
does.
coming into Toronto DAO. It affects, the parties, the events, the community initiatives. And when
It's
the
the difference
market's
between
hot, the
one.
market's hot. Yeah,
It's the difference between 1 and 2 drink tickets.
exactly. Exactly. I
All
like
right.
it. I like how you put it so
Yeah. Yeah.
simplistically.
I'm
That's right.
actually pretty proud of that one too.
Yeah, that was pretty funny. That's pretty funny. Yeah.
Okay,
Yeah.
thank you so much for joining us again. My name's Matthew Glezos. I had Audrey here for the second time. Like we said, hopefully we go for the hat trick soon. And thank you so much for joining us this week. And I hope everyone has a great weekend.
All right. Bye, everyone.